Hello, my name is Douglas Arner, and welcome to this month's episode of Looking Back, Looking Forward. At the beginning of the year, I highlighted 5 major issues that I thought were going to be some of the most significant for not only the rest of this year, but really for the remainder of the decade. And I want to focus in on the first of those this month. And that is the idea that as of 2024, in a large number of important jurisdictions, digital assets are for the first time becoming a regulated industry. Now, if we think about this, the original Bitcoin white paper from 15 years ago, 2008, the establishment of the Bitcoin blockchain in 2009, the subsequent decade and a half, there have been constant discussions about how or why or whether to regulate digital assets. And I think we're at a very important turning point from the standpoint of the market this year in 2024. I think we're seeing really 4 different groups of jurisdictions across the world. And in one group of jurisdictions, which includes the European Union, the United Kingdom, Switzerland, Japan, Hong Kong, Singapore, and the UAE, among others, this year will mark the year that digital assets become a regulated industry. We've seen a series of efforts internationally through a variety of international organizations, from the Financial Action Task Force to develop standards on anti-money laundering, from the International Organization of Securities Commissions from the standpoint of enforcement and securities regulation, intermediaries regulation, from the International Monetary Fund and the Financial Stability Board looking at issues around safety and soundness. All of these have come together over a period of years to develop international standards which are now being implemented across this core group of jurisdictions. And from this year going forward, we will see in this group of jurisdictions a comprehensive framework around anti-money laundering laws, around licensing requirements for market intermediaries, around enforcement standards from the standpoint of a variety of forms of misconduct, from a variety of market monitoring standpoints to ensure financial stability and appropriate market functioning, and from the standpoint of dedicated frameworks for stablecoins. And I think when we look at this, this is going to be looked back on historically as a very important point from the development of this sector of the financial system and the digital economy. Going forward, we will see not only the various alternative institutions, providers, actors becoming licensed and regulated institutions, but we will also mark the entry of a variety of regulated financial institutions, such as banks, securities exchanges, insurance companies, and others, into this space. And that means that we're going to see an increased competition not only between various forms of new and old intermediaries, but also between new and old forms of money. Central bank digital currencies, stable coins, tokenized deposits in the context of capital markets, an ever-increasing range of tokenized structures, particularly in debt capital markets, foreign exchange, and in early stage capital formation. And as we go forward across the rest of the decade, this new competitive landscape, but one that operates in a much more protective and formal regulatory environment, is going to mark an entirely new period for digital assets and for finance going forward.